Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Monday, October 6, 2014. And today was a slight down day, although it was down a little bit more in the middle of the day. This is daily chart of the SPY. In the morning, you went up into the 50 moving average, and this is after Friday's big up day, after the reversal during the day on Thursday. You had a nice rally on Friday, finished pretty strong, sold off last couple minutes of the day. And then today you went up into the 50 moving average, into this resistance point here, all this consolidation, and then backed off and finished a little bit down on the day. So where are we in terms of, my Fibonacci's not going to work. Where are we in terms, I always, never mind. Okay. Anyway, so what happened was, let me show you something a little more important that happened today, because the question is, where are we going? Was this the bottom, and are we going straight up from here, or do we have more downside? You know, what's going to happen? So I'm going to try and answer some of that stuff tonight. So here we go. Let's take a look. Let's just swing over real quick to the IWM. And this was, again, real weak. Now, your bounce off the low, remember the 108 level I told you about? Well, we pierced it, but then we closed right around it, and then we bounced off of that. But we didn't really get too far. Today, the Russell, or the IWM, was real weak. Remember, small cap index leads the market up, leads the market down. They've been talking about it on TV lately, the last several days on CNBC, and you've got the parade of excuses about why, the IWM weak now is good for the market, all kinds of nonsense. Don't listen to it. If the IWM is weak, the market's weak. And basically, if you break these lows, there's trouble ahead. So that's one of the tells that I'm looking at. The other one is, just forgive me for a second. Yeah, the transports. The transports were real weak today, and basically they opened up, went up to 84.54 and closed down 84.29. That's a pretty good swing, and I got to tell you that the transports weak and the IWM weak is a tell for the market. It's not telling us everything, but it's something that has me a little bit concerned that the low's not in. Now, here's a couple of other things, okay? You have two eclipses this month. On the 8th, which is Wednesday, and the 23rd, which is a couple of weeks from now. One's a solar eclipse, and one's a lunar eclipse. One's a half eclipse, one's a full eclipse. I don't really know the difference. All I know is that they have an impact on the market, and they tend to have a trend change impact, okay? Whether we're going up or down, we tend to change trends around the eclipses. But it can also accelerate the market, so it doesn't have to be a trend change. It's just something normally happens, and you can make an excuse that it was the eclipse. Okay, so if the market accelerates in one direction or another, or turns in one direction or another, it's easy to say it was the eclipse. So I'm just letting you know that that's coming this week. There's one. So Wednesday, there's something to look at. And then you have options expiration is the week of, or I think it's on the 17th of this month. So that week will be as normal, volatile. So and oh, by the way, earnings start this month. That was the other thing. Earnings start this month, which means that you're going to have earnings surprises. You're going to have surprises on the upside. You're going to have surprises on the downside. You're going to have all kinds of stuff going on. So options expiration, volatile. Earnings certainly getting volatile. Eclipses have a tendency to turn the market in one direction or another. And that's October. So I think the month of October is setting up to be somewhat volatile. So you're going to have up moves and down moves. So it'll look like the rally's here, and then it'll look like something else is going on. So you have to be a little bit weary about October, but it's a good tradable market. So that's kind of where we are. What else do I have in my notes here? We did IWM. Okay, you know what? We'll just switch over to gold, and let's talk about gold and what happened. So overnight, the gold contract, the gold futures contract, went down to 1183, I believe was the number, and then it reversed up, and gold went up today, and it pretty much went up most of the day. It kind of went up a little bit stronger in the morning, and then it drifted for the remainder of the day. But gold, don't forget, gold closes at 2 o'clock or 2:30 or something like that. So after that, nothing really goes on anyway. So what happened was we had a nice reversal, but I know nobody wants to hear this, or at least the gold bugs don't want to hear this. Right now, until further notice, okay, until we can get a rally in gold. We can get another $20, $30 rally in gold, no problem. And it could happen this week and all that stuff. But the longer term picture is the trend is down. Here's your 20 moving average. Here's your 50 moving average. Okay, here's your trend. Now, of course, you can get bounces, and you can get a bounce. And if you look at the weekly chart, this is important. I want to go through this. The weekly chart, you got this triple bottom here, and you can certainly shoot off that. But my work is telling me that the normal seasonality period that should turn gold up already, okay, where we are, it didn't. And a lot of other factors, most of which are mathematical, and the fact that the market is struggling and there doesn't seem to be a bid underneath the market, and the market has downward pressure on it, and a lot of factors tell me in my work that gold is going lower. And I know nobody wants to hear it, but I think gold's first stop is going to be around 1130, 1140, and then we can even get down another $100 from there, and after that, I'm not sure. But I'm seeing that, and I'm seeing that pretty clear. So if you're long gold, be careful. Okay, there is a bounce in here, and we can certainly get up to 1250 if we get the right setup. We're not there yet, but that could happen. But you need to be wary, and you need to understand that the downside, until gold shows conviction over 1250, that downside is in play, and we'll just leave it at that. All right, let's go over and talk about oil, and we'll look at the USO. And I want to talk a little bit about oil too, because oil caught a bid today mainly in... that was the wrong symbol. Mainly talking and typing. There it goes again. Mainly because of the dollar. And you know what? Now's a good time. We'll just bring up the UUP. I can't get the dollar index on this chart. I don't have the ICE on this chart that I need for the dollar, the ICE marketplace. But here it is. So you had the UUP. You had a good reversal day today in the dollar. This isn't a full reversal day. It's close enough. And there should be more downside for the dollar, but the dollar is going to remain in an uptrend. That's my take. Okay, you're most likely going to retrace about a third of this move. So from here to here, you're gonna probably come into this area here about 22 and a quarter, maybe about 22 and a quarter. But it's going to take a while. Okay, so while the dollar is coming down, you'll see maybe gold floats up on the inflation or the low dollar or the decline in the dollar, or even oil catches a bid. But what I want to mention, and let's go back to the USO, okay, because I want to mention that again, just like gold, my work is telling me that oil, not the USO, but the price of oil is still going to go down to the mid 80s. I like 85, give or take $1. Okay, so that puts USO in my book somewhere in this 31 neighborhood, 31 and a half, 31 to 31 and a half neighborhood, if my calculations are right. But either way, downside coming. But we can certainly get a bounce with the dollar selling off. It could be an excuse to give oil a bounce. So I don't have a setup yet for a short play, but when one comes out, I'll let the members know when that looks good. But I'm trying to stay away from the whippy markets because the swing trading can be a little tough right now, and especially in the month of October. Sometimes no trade is the right trade, and right now there's not a lot of great trade setups out there. There's some, but it could be very volatile, especially around Wednesday of this week. So I got to be very careful. But I like the oil setup is on the horizon. So that's what I'll say about that. I think that's about it for tonight. Let's leave it there. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.